here, and good day, guys. Good afternoon, good evening, whenever you're going to be watching this video. So here is another trade breakdown, or should I call it an entry I have on SPX 500. So as usual, I try to make my videos in the early hours of the day, so it's still fresh. The day is very early here. All right, so this is SPX 500, and what do we have? So starting our analysis, we like to start from the weekly time frame, and as we all know, SPX is very bullish. All right, and remember, SPX and Nasdaq move together. All right, they kind of have similar movement. So we have a break of structure to the upside, break of structure to the upside. Anyway, this is the weekly time frame, so we should be focused on this aspect. All right, so what do you see here? We have a little bit kind of a range on the weekly. Let's go to the daily so we can see better. All right, so what do we have on the daily time frame? On the daily time frame, here we had a break of structure to the downside, and the market reversed, took out this liquidity, tapped into this other block, and then boom. So currently the market is bullish. You can see this is the daily other block they tapped into. Let's use this as our primary liquidity. All right, so what do we expect? This is the overall target where we know the market is coming back to. All right, so anyways, let's go to the 4-hour time frame to see what exactly is going on. All right, so since this is where the market tapped and this is where the market is going, we know that okay, at the end of the day, we should end up at this high. Yeah, so the market is actually making structures. We have a high, we have a low, then I think we have a break of structure here. Yep, we have a clean break, or can bring it to this side. So this is a break of structure. So what do we expect the market to create a low and then give us another high? And then if you come to look within this range, you're going to see that we have our setup here. All right, so nevertheless, let's look at it. All right, so when the market created this low, it gave us this high. Yeah, sometimes you can use this if you want to have a clear view of what the market's doing. So if you look at this, we have a pattern here that forms our structure. Remember, we don't do straight patterns blindly. We'll wait for it to give us our structure, and then boom, we look for buys. So this is what I can see here. The market did give us this low. Then we had a break of structure to the upside. Then it came back to sweep this low, right, which is the first sweep. Then it gave us a break of structure to the upside, took out this high, break of structure, then gave us a structural liquidity here. Okay, which means we expect the market to later come back to sweep, tap into our POI, and then move to the upside. So after giving us this liquidity, it gave us this high. Again, a break, gave us this high, then came back, tap into our other block, or the QMR, whichever you would like to use, tapped, boom. And what are we expecting? So literally this is what we are expecting. Let me make this tick so you can see it clearly. Let's make it this. So and bring it out. So literally this is what we are expecting on SPX 500 and on Nasdaq, because they are all the same thing. All right, so now let us label this diagram and then move deeper so that you guys can see exactly what I'm saying. So let's go to the let's use the 2-hour time frame so that you guys can see this clearly. So on the 2-hour time frame, what do we have? We have a sweep of this low, which was a very clean sweep. And then the market gave us this low as our liquidity. And then on the 1-hour time frame, you see that we have here as another draw of liquidity. All right, let's use this to see here we have a liquidity. If you use the 1-hour time frame, it's going to be very clear. All right, so you can see this here as a sweep of liquidity. So those using QMR, you mark this other block from here. Boom. And now what is a QMR? A QMR is simply an order block that failed. What do I mean by failed? I mean something that the market invalidated. All right. So here is another block which the market should have tapped into and then continue buying. But instead, when the market came into this order block zone, it tapped into it, but then it's invalidated it. So what the theory states is that whenever the market comes back into this POI, this other block that failed, it should hold the second time. All right, so you can see here is exactly where we tapped into this POI. All right, this is where we tapped into this POI. Now, looking for a confirmation entry, you see this whole structure that happened on the higher time frame. We want to see it after the market taps into our POI. That's here. All right, we want to see the market give us something the same within that zone. So now, what we have here on the 1 hour time frame for confirmation, there is a structure here, but it's not that clear. So let's go to the 30 minutes. Let's look at it on the 30-minute time frame. On the 30-minute time frame now, we have the same thing. You can see the moment market tapped into this structure, into this POI, we already have this. If your eyes are trained, you can already see your structure. We have a sweep of liquidity, we have a break of structure. Market came back, gave us a structural liquidity, came back, swept the structural liquidity, and then it's buying. So literally, that is all we are looking for. So here is your sweep. Boom. Here is your break of structure, the first break. Here is your structural liquidity with the market swept. In fact, the market gave us, we can say, 2 break. And sometimes I don't like to consider this as a break of structure because it's only the week that we have. We don't have a body close above this high. All right. But anyways, we have a break of structure here, which is good for me. Now, taking this trade, boom, on a lower time frame, every week is another block. Every week is another block. So this is other block refinement right here. If you go to a lower time frame, you see that here is another block. Okay, so we know that definitely the market is going to come and sweep this low because this is our structural liquidity here. So what we waited for is the market to sweep this low, tap into our POI, and then buy. So then we have this. Then it cover the initial low, which is this. Make sure you cover it good. All right, and then what do we look for? We look for that push. Boom. Sometimes I don't like to mark the initial high, just like to look for a liquidity zone before the main high or the low before the main low. So literally this is what I have, XPS, and then let's see how it's going to play out. The market is still within our POI, and this is I think a 4.7 hour, or you can just take your 4 hour and exit the market. So yeah, this is it on SPX. I'm going to be making order reviews of my entries, and I think I'll try to see if I can also make a complete video when this hit takes profits, or if we end up in SL, whatever the case might be. And also remember, whenever you have a trade, even though it's an A+ setup, remember that you don't control the market. The market is always going to do what the market is going to do. It's just for you to always manage your risk and make sure your risk is consistent within a series of trades. All right, so it can be here, and trying to keep this video as short as possible. So stay safe and trade with patience.